Hey everyone, recently on 20th September there was an interesting transaction where Vanguard has invested in 7 small cap stocks of India. In case you are not aware of Vanguard, it is one of the world's largest investment firm that manages an AUM of around $10 trillion. And it is a pioneer in index fund and ETF investment in the US market. It has added these 7 small cap stocks under Vanguard Total International Stock Index Fund that tracks FTSE Global All Cap X US Index. So let's quickly discuss the stock names and figure out their growth prospect. But before that, a disclaimer that this video is only for education purpose. Please make sure that you do your research before investing your money. Alright, let's get started. Alright, so this is the list of companies where Vanguard Total International Stock Index Fund is invested. First name is Genus Power. You can see it's on 20th September, quantity purchased, price at which it is purchased. Second name is 5-star business. Third name is Vatek Wabak. Fourth is Sansar Engineering. Fifth is Arwin Fashion, sixth is Concord Biotech, and seventh is Marten Pharma. By the way, we have already discussed 4 companies out of this list of 7 companies in detail on our YouTube channel. Now, those of you who are just looking for stock names, you can skip this video because over the next 10 to 15 minutes, we are going to discuss the growth potential in these companies and whether they are still available at reasonable valuation. So let's start with Genus Power first. I remember covering this company on 17th of May 24. So a few months ago when it was at levels of 314, today it is at 424. So it has generated around 35% return. Basically, Genus Power is one of the manufacturer of smart meter in India. And smart meter has got a huge growth potential because Indian government has planned to set up 25 crore smart meters. They were actually targeting 2025, which I don't think is possible because as of today there are only 1 crore smart meter. So even if we reach half of the mark of the target that government has set, it is going to be a massive opportunity. And if you look at the numbers of Genus Power, so its market cap is around 12,800 crore. And first of all, if you look at the valuation, its P is 131. Now, just looking at the P ratio, the first reaction is it is exorbitantly high. And this is exactly what I've explained in my long video, why you should not look at this P ratio blindly, because there's an immense growth potential in the company. If you look at the P&L, earlier there was not much growth, but recently between FY23 to 24, its revenue has jumped by 50% from 800 crore to 1200. And company's net profit has jumped from 35 crore to 75 crore. So nearly doubled, in fact more than doubled. The question is, what is the growth prospect for the near future? And that's where I have gone through all the con calls, and you can see this is the latest con call for 31st July, where management has set a target of 2,500 crores of revenue for FY25. Mind you, FY24 target was 1,200 crore, which means the revenues are going to be more than double in FY25 if the company can achieve management guidance. And not only that, EBITDA are going to be in the range of 15 to 16%. And currently the EBITDA is 11% for FY24. What it means is that if company can achieve the guidance, its EBITDA would be in the range of 375 to 400 crore. Against the operating profit of 135 crore. So there is going to be 3 times growth expected in operating profit for Genus Power in FY25 as per management guidance. And if that happens, company's P ratio would fall down drastically. So in my opinion, although the share has rallied, so basically there was a sharp rally between 22-23 where stock jumped from 60 rupee. In fact, it was at around 80 and then immediately zoomed to 700 and then kept on going up. So if you look at last 1 year, from 270 rupee, it has now it is at levels of around 423-24. Right, so there has been a constant up rally, mainly because, like I said, the growth potential is looking very good in the smart meter industry. So you need to keep a close eye on the company. If company can achieve the guidance, there's going to be lot more growth potential coming ahead for the company. Then one more thing I wanted to highlight is, as of 28th August, which was the latest update, company's order book is now at 32,500 crore. Now try to understand this. Company's total sale for FY24 was 1,200 crore. Against that, company is sitting on an order book of 32,500 crore. So that's nearly 30 times. In fact, 25 times of the sales they've got the order book. So imagine the kind of scale they have to operate on. Although this order book has to be executed over the next 8 to 10 years, but there's an immense growth. In fact, just before a few months ago, on 31st July, company was sitting on order book of 21,500 crore, and within around 1 to 2 months, the order book has jumped by 50% to 32,500 crore. So that itself shows the growth in order book, and if it can execute this order book and can show the number as per the guidance, I think there's a lot of growth ahead of Genus Power. Next, moving on to the second stock, we have got 5-Star Finance. So it is basically a microfinance company. If you look at 5-Star Business Finance, its market cap is around 23,000 crores. It's more of a mid-cap kind of company. P ratio is 25.6. Price to book is 4.46. Now, I don't look at the P&L and balance sheet of these NBFCs or banking stocks on screener because I don't get a fair idea. And that's where I look at their investor presentation. That clearly shows the KPIs across parameters. So if you look at the quarterly performance, which is for Q1 of FY25, disbursement is up by 16%, AUM is up by 36%, net worth is up by 20%. And if you look at the disbursement over the years, so it was 2,400, actually this data is in million. So from 2,400 crore, it fell down to 1,200 during COVID. But look at the sharp recovery over the last few years. And the AUM has jumped from 3,800 crore all the way to 9,640 crore. So consistent growth in AUM. Then if you look at other parameters like P&L indicators, the quarterly data for income is up by 38%. Interest expense is down by 64%, which is positive sign. Credit cost is down by 22%. Profit before tax is up 37%, PAT is up by 37%, and you can see the income data for last few years, consistent growth year on year. Apart from this, if you look at the spread, so this is again nothing but your net interest margin. So this data that you see here, 24.3, 24.2, it is nothing but the portfolio yield. So this is the interest they get on the loans that they offer. So obviously it's extremely high, and mainly because it is into your microfinance segment where the interest rates are extremely high. Then if you look at the cost of borrowing, it was around 12%, and from there it has fallen to 9.7%. And because of this fall in cost of borrowing for the company's spread, which is nothing but the net interest margin, has gone up from 12% all the way to 14.6%, extremely high net interest margin for the company. And the only catch here is that since it is into your microfinance, which is where company can charge a very high interest rate, but also the fact that here you have to keep a close eye on the asset quality. You want to make sure that company does not end up with very high NPAs. So this is one risk that you have to ensure while investing in microfinance companies. Apart from this, if you look at asset quality indicator, collection efficiency has been top notch for the company. Company's gross asset, 3 asset is 1.4 so NPS percentage of total loan, and this is nothing but net NPA, that is at 0. So asset quality is also looking very good. Now if you look at the valuation as compared to the growth, it is decent, but remember that it is on the riskier side where microfinance segment is currently facing through challenges of slippages that we have seen with other companies. So keep a close eye, but your Vanguard adding it is a positive sign. Then third company in the list is Vatek Wabag. I remember covering this company when I discussed the water recycling stock. It was on 29th March, a few months ago. At that time, Vatek was at 763. Today it's at 1500. So the stock has almost doubled in last few months. Now, if you look at the potential in Vatek, so currently it's a market cap of 9,200 crore. Again, we have discussed it. Water recycling has got a lot of potential, mainly because we have been facing through a lot of challenges, like we have got droughts in various parts of the cities, then we have got water challenges in metro cities, even we have seen how Bangalore has struggled. On other side, your Indian rivers are getting polluted big time, and there's a lot of scope to clean those rivers. Apart from this, you have got these industries discharging a lot of waste that has to be treated. Then there's an opportunity of your recycling water from sea and converting it into drinkable water. So all in all, Vatek has got a lot of potential, and if you look at company's management guidance, but before that, let's quickly look at other numbers. So its P ratio is 37, So before a few months ago, when it was at 700, 800, P ratio was quite attractive. But today it is at 37. Still, we have to figure out whether it is reasonable or not as compared to the growth. We'll come to that. Apart from that, ROE, ROC looks decent. Debt to equity looks decent. Company generate decent amount of CFO to EBITDA, so cash flow is also decent. Company's growth in the past has not been great, but recently there's a lot of interest. And look at this, company's net profit has jumped significantly. Actually, this was because of minus 226 crore one-time loss. But otherwise, the company's operating profit has been growing at a very good rate. The important aspect is management guidance. So what management is saying, that this is as of 9th August 24, the latest con call, they are saying that they can grow their top line by 15 to 20%, and they are looking at 13 to 15% kind of EBITDA. As compared to that, currently the EBITDA is 13%. So there's still more scope for EBITDA improvement. And they are looking to add for next year 15 to 16,000 crore of order book. Considering all these factors, I think Vatek still has got a lot more potential to grow, and the long-term potential for the company is absolutely intact. I think this is one company that is looking quite promising in water recycling theme. Now, before we move on to the next talk, in case you find my analysis useful, you can also explore my weekly video series where I discuss one exclusive video every week that includes stocks where I'm investing my own money and showing my own conviction. Again, this is not a buy or sell call. The idea is to share my knowledge and only for long-term investor. I also share my portfolio detail and what levels I am buying and all of those things. In fact, apart from this, I also maintain this Excel tracker of quarterly results, and then I also maintain a lot of other Excel trackers like FIDI holding, then your stocks by consumption, IT, tech, banks, pharma, and so on and so forth. In case you are interested, you can explore my website, or you can also explore the join button on this YouTube channel. Now, moving on to the next talk, we have got Sansar Engineering as the fourth company. I remember covering it last year on 23rd August when it was at levels of 940. Today it is at 1670, so 78% return. It is also part of my Diwali pick for last year. And just to give you a quick idea, it's basically an engineering company that is into your precision forged and machine component for OEMs. Okay, so 76% business of the company is from auto ICE, that is internal combustion engine, where you can see the breakup across two-wheelers and four-wheelers. Then 12% business of the company is from tech agnostic and EV segment, and 12% comes from non-auto. So company is also into non-auto segment. You can see there are 17 manufacturing facility, more than 500 dedicated engineers, and 69% business from domestic, 31% from international. This is the list of the products for auto ICE. I don't want to get into the details. It's across two-wheeler, passenger vehicle, commercial vehicle. Then you have a list of product for auto, which is tech agnostic and EV. And then you have got non-auto component as well that include your aerospace and defense, off-road, agriculture, and others. This slide gives a fair idea. In India, company has got relationship with all major two-wheeler OEMs. Then 5 key passenger vehicle OEMs accounting 54% of market share. More than 30 years of relationship with leading passenger vehicle OEM, relationship with 4 out of 5 EV OEMs, and likewise company has got good relationship with global OEMs as well. So currently Sansera is trading at P ratio of 48. Its market cap is 9,000 crore. Considering the kind of growth, so if you look at it, company's growth has been pretty good in last 3 years, 22% CAGR in sales and 20% in profit. Consistent growth, and in fact, even company has got good potential in the near future, and that's where I think it is looking promising, although the valuations are slightly a bit stressed in my opinion. So that is something that you need to look, but otherwise for long term, I still believe Sansera has got a lot more potential. Then fifth stock in the list is Arwin Fashion. Now this is again a very interesting company. It has been a turnaround story for the last few years. It was struggling, especially after COVID, and then company has turned around. In case you are not aware, basically Arwin Fashion is the owner of these brands in India that include your US Polo, Flying Machine, Arrow, Calvin Klein, Tommy Hilfiger. Again, these are top-notch brands, and some brands like US Polo, Tommy and Calvin Klein, they are the leader in the category. Now you might be wondering how come Arwin Fashion be a owner of US Polo, Arrow, these are all foreign companies, right? Tommy for that matter. The thing is that companies involved in licensing agreement where the parent company of brands like US Polo, Arrow, they are in the US, they do this licensing where Arvind can use their brand name. Okay, so that's the licensing. Against that, Arvind has to pay the royalty to them. But Arvind actually manufactures, distribute, market all these things in India. So in a way, you can say it's the owner of these brands in India. I hope you got a fair idea. Flying Machine is actually a part of Arvind's own portfolio. So very promising portfolio. Again, it is part of premiumization theme where there's a lot of improvement where people are looking for branded stuff. And personally, I like a lot of these brands from the house of Arvind. If you look at its valuation and other things, currently its market cap is 8,000 crore. Again, if you look at the P ratio, it is absolute crazy at 101. But if you look at price to sale, it is just 1.86. EV to EBITDA is just 16. So what has happened is, like I said, it struggled during this phase where the sales fell down. There were multiple reasons for struggle. One of them was there were inventory issues. Company was inventory was piling up. There were also issues regarding the discount. So these companies, they were giving a lot of discount. People used to wait for it, and because of that, there had been a lot of issue around the inventory. Then demand was another issue, mainly because of COVID fall. But then there's a decent recovery, and if you look at it, operating profit has zoomed multifold times. Look at this. All the way, it was 224, fell down badly during COVID. From there, there's been a very good growth in operating profit. And that is the reason you have to ignore this P ratio, because once the operating profit would improve, company's brand would be established, and companies opening a lot of new stores, so it's spending a lot of money, because of which the P ratio is not looking good. But price to sale is still decent. EV to EBITDA is still decent at 16 as compared to Aditya Birla Fashion, which is in the same segment. It's 36,000 crore company. Price to sale is 2.59 and EV to EBITDA is 26. And it does not even show P because it's in loss. So as compared to Aditya Birla, I believe that Arwin Fashion has got much better valuation. And this is one company that if you feel that premiumization is a good trend, you can consider. I was going through the con call where management has said that they're expecting 100 BPS expansion in FY25 in terms of margins and double-digit growth in FY25. So again, not an exponential growth I'm expecting in FY25 in top line, but still company is doing well, and management expect 12 to 15% kind of growth. So let's see how it goes. Overall, it is again a very promising company that I found in this list of Vanguard purchase. Sixth company in the list is Concord Biotech. It is basically a biotech company that manufactures the APIs. So that's what it says. I don't want to get into the detail. One of the biggest news that has happened recently is the announcement of Biosecure Act. Not sure how many of you are aware, but US has passed this Biosecure Act that could be a game changer for Indian pharma sector, and that is one of the reasons some of the pharma stock have zoomed recently, right? So basically this act says that US drug maker cannot engage with the 5 Chinese companies after 8 years. So this act prohibit these drug makers to engage with these 5 businesses. There are 5 big Chinese business, but that is after 8 years. But so basically it's a long-term story, but I think a lot of this impact would be seen, positive impact would be seen on Indian biopharma companies, specifically biopharma. And that's where I think Concord is looking quite promising. Its market cap is around 25,000 crore. Although P is looking high at 79, price to sale is 24, and EV to EBITDA is 52. So again, valuations are on higher side. But if you look at the growth, companies' growth in the past has been pretty decent. So if you look at it, 5-year CAGR growth is 18% and 5-year profit growth is 20%. So that's a pretty decent growth. In fact, I was going through the investor list, and within public section, I found 3 names. Aryaveer Jhunjhunwala, Aryaman Jhunjhunwala and Nishtha Jhunjhunwala. They are the son and daughter of late Mr. Rakesh Jhunjhunwala, and they together hold 24% stake in this company. So my only concern is the valuations are a bit stretched. Otherwise, this is looking very, very promising. I was going through the con call also where management has given exceptional guidance. Look at this. This is as of 12th August, where management has even said that for the long term, they're expecting 25% revenue growth over the period of 5 years. So 25% CAGR growth for 5 years is exceptional. And the reason is because there's a strong product pipeline of 8 to 10 products that would be commercialized in the next 3 to 4 years. So that is the reason why probably Concord Biotech is consistently going up, especially after the US Biosecure Act, the stock has rallied. But in my opinion, the valuations are a bit stressed. Any correction in the, so today it has corrected 8%. So any correction in Concord Biotech, I think you should keep it in watch list, and good correction will create buying opportunity. Now, final list in the buying of Vanguard is Marten Pharma, again a pharma company. I remember covering this company recently on 23rd August. So a few weeks ago, at that time it was at 226. Today it's already at 311. So it's already generated 37% return from the discussed level. And just to give you a quick idea, again, I would really suggest you to go through this particular video where I explained the business model in detail. It is basically a OTC business player. OTC is nothing but over the counter. So company provides drugs, it manufactures drugs that are sold over the counter. 80% of the sale is from store brand, and it also has got its own label where 20% sales are there. If you look at the revenue by segment and geography, you can see 84% is from OTC and 25.9% is from subscription, the doctor subscription. And you can see North America is 42.5% contribution. UK and Europe is another 42. So nearly 85% of the business of the company come from UK, Europe and North America. Apart from this, if you look at the journey of Marten Pharma, so it's a 14,000 crore company, P ratio is 42.8. Valuations now are a bit stressed because of recent rally. But overall, if you look at ROC, ROE, very good. Debt to equity is again negligible. Very good CFO to EBITDA. And the growth in the past has been also consistent. So 5-year profits have compounded at 33% rate. So look at the growth in companies' profits. Just that recently the stock has rallied. In fact, there's a sharp rally. Having said this, you don't just need to look at the past share price movement. The point is, can you buy it today? So at P of 42.8, maybe I find it a bit stressed, but I still believe there's a lot of potential for the long term to for the company to create wealth. So let's wait for the result. In fact, even FIs have consistently added this company, and that's where I find that even Vanguard is finding it quite promising. Just that I had a look at its con call where management said that currently their revenues are around 2,000 crore, and in the next 2 years they are projecting revenues at 3,000 crore. So this was one of the major reasons. If you watch that video, I mentioned that in 2 years company is projecting 50% growth in the revenue, and that is the reason at that time when I discussed, it was at P of 28 and found it very, very attractive in terms of valuation, and that is the reason I discussed it. So this is it for this video. I don't want to stress this video further. These are the names that Vanguard has added. Just tell me in the comment which stocks from this list you are holding in your portfolio. If you find this video useful, let me know. And if you want me to discuss any of the business, for instance, I have not discussed Arwin Fashion, Concord Biotech in detail. So if you want me to do that, let me know in the comment. I'll see you next video. Till then, take care.